So in your case, like you are kind of thinking about scaling right now. That is, from whatever size you have been trading, you're thinking about sizing up your position. Okay. Now, since like as far as someone who is trading in the markets is concerned, now right now, like you're kind of actually considering it to take it up mainstream. That is, you're thinking about getting into it full time, and
Full
you're not
time,
someone new
yes.
to the markets also, right?
Correct, correct.
So
Yeah,
you have been consistent from almost 2 months now.
2 months, yeah.
Yeah. So like just like you, almost 1 year back, Javed, right? Not 1 year back, I guess, like almost 8 months back, not even 1 year. So almost 8 months back, like Javed was also at the same situation. So
Right.
basically, like if you kind of consider trading, there are majorly like two stages, I would say. So the first stage is where you are in a loss making area. You really don't know what you're doing. Okay. So you're
Okay.
keeping on kind of accumulating losses. You're not still capable of figuring out what to do and how you could break even. Now, the second phase is where you probably would still be underwater. Underwater means you still would be in a drawdown or your equity would be still negative. But then you probably would have actually kind of figured out one particular system or one particular setup that is giving you some profits in a consistent manner, even though the profits are not so huge, but it still would be giving you some sort of a profit.
Right.
Now, as far as someone who is getting into the markets is concerned, so even if you are in that negative territory, if you have figured out something that works for you, that suits you, that's it. If you stick with that, definitely your equity is going to come to the positive side now.
Okay.
Right. Now, after that, like there is this particular stage, like all of us go through that. So after that, there is definitely going to be this particular stage that you become profitable, you become like consistent. It could take you maybe a larger duration of time, but your system
Okay.
will be working for you, right? So at
Okay.
that particular phase, we think, okay, we have actually kind of found this particular setup that works really well for us, and I can get into full-time trading.
Okay.
However, like what I would say is, yeah, you can think about scaling at this point of time, but then get yourself comfortable in at least one or two more systems. So rather than sticking with one particular setup, because I have suffered because of that. Okay.
Okay.
So in fact, I got started with trading when the markets were really trending. So markets were really trending. Market was really smooth. That was the time when I have kind of got some amazing trades also. So what
Okay.
happens is that in that particular phase of time, we feel really overconfident about ourselves. As in, so that was like one of the biggest mistakes that I personally have made also. Like if I'm trading, let's say 2 lots right now, I probably would think about scaling to maybe 4 lots or 6 lots the next month because we have the capital. Or if
Correct.
we have
Correct.
a bank, we think about bringing it all in. So we just want to make the process with how we are making profits a bit more fast, right?
Correct.
Like your particular case, you may kind of consider like right now you're trading silver futures, right? So you could kind of definitely think about sizing your positions. So would you need to size your capital? Would you need to bring in more funds, or would it kind of come under your, or you're just increasing your risk? What I'm asking is, so there are two ways you can size: either bring in more capital or increase your risk per trade. So which one would you think you would have to do?
I would be going for increasing my capital.
Increasing your capital. So that is like you're going to maintain your risk the same and you're going to increase your
Yes.
capital. Yeah, that is
Right.
actually kind of better. That is kind of uh, a better methodology to kind of actually maintain the same mindset. So now
So
you're
because
risking.
I am considering risk only 2 to 3% of my capital I'm risking right now for each
Okay.
trade.
So you're risking
Yeah.
2%. Okay, that's a big amount. Okay. So two
I know.
percent you're risking. Okay. Got it. So that means
But
like,
my capital is small, so I
yeah,
could
see,
take
capital
the
is
risk.
small or
Yeah.
big, that doesn't matter. So how you're kind of actually getting started. Then one more thing is there, like once you find a comfort zone in kind of sticking with a good risk reward ratio, it is kind of more or less almost impossible to come out of it. Okay, so if you have found a comfort in kind of taking a risk of 0.5 percentage, looking out for 1 percentage, your mind get used to it. So that is also there. So right now, I guess Javed is also following something similar, right? He's
Yeah,
also,
yeah.
yeah. So yeah, so you can actually do that. Like you may think about rising your size, but then
Mm-hmm.
I would kind of actually like to say, so rather than kind of scaling too fast,
Mm-hmm.
okay, you may keep some targets. That is like, let's say that you're capable of generating a 20-25 percentage, so that you can actually keep as a benchmark. Because you said, okay, your size, the capital that you're using right now is less, and you're very much comfortable in whatever you're doing, whatever systems you're following, you're very much comfortable in that. So you may
So what
consider,
I'll tell you,
yeah,
what the status about my capital is. So my
okay,
capital when I started with Silver since 2 months back, it came down to like 10K less. Then I
okay,
recovered it. Then I grew it to 5K more, and then it is somewhere near around that same particular. My fund are remaining the same. I
okay,
cannot say they are growing huge, but
okay,
neither they are drawing down. So I'm able to sustain the capital whichever whatever I'm having right now.
okay. So then, like, why do you think about scaling then? Like, what makes you think about increasing your size?
Because the thing is with the capital right now, I'm only doing silver in micro.
Okay,
That is like 1 or 2 lots
okay,
max. So if I'm thinking of getting bigger capital, and if I only risk 1% of my capital, then I
okay.
can still maintain that amount of because what I'm saying is that I'm having it is too less a time to judge myself, but still I could feel that I'm better in having that risk reward ratio.
Then you can, then you could actually bring in more capital, but then like then you should be bringing down your risk also. So from 3% to 2%, you're going to bring it down to 1% per trade,
1%.
right?
Right. Right.
So I guess then you are in that first phase itself. You just have figured out something that works for you. So
Mhm.
now you know how to protect your capital. That is,
Correct.
you're not. So you have actually kind of figured out something for you that works. You can protect your capital in the first place, right? So
Correct.
that definitely is the best thing. So if you know how to defend your capital, then you should be thinking about scaling, or then you should actually kind of think about. So if you want, yeah, you can bring in more capital, man. But then, if I would say, like, if your capital is not seeing any growth, or else if your capital is actually kind of more or less staying stagnant, then kind of actually think about going forward with the same capital. Maybe another 1 or 2 months, you would see a steady rise.
Okay.
So then you can think about bringing in more capital, because if the capital is going to stay stagnant, or the capital doesn't kind of see any particular growth or degradation, so
Mhm.
this capital you may kind of actually think about putting in some liquid funds, right?
Right.
So once
Right.
you figure out, okay, this works for you, you see a growth in your equity, then you think
Mhm.
about bringing the more capital. So till then, maybe if you have another 2 months time, you're going to get
Mhm.
more comfortable in whatever you're going to do, right?
Right.
So then you
Right.
can actually think about bringing in the capital in a more confident way.
Correct. Correct.
And this 2 months time, you may kind of consider thinking about working on some other system also, that you could actually kind of use alongside whatever you're following. So that is complementary. The sense, like when
Mhm.
you're doing silver, so
Mhm.
like there is no point in me to ask you to trade crude, because if you're completely analyzing silver, and if you really don't have time to track crude, there is no point in you tracking crude, right? So you may think about something either in the morning markets, or if you have time in the evening markets to kind of track crude, natural
Mhm.
gas, things like that. You may
Mhm.
consider one. So if you can track crude oil, natural gas, you can trade very smooth. Same if you know to trade silver, you can consider trading gold.
Correct. Correct.
You can trade gold, nickel also. Nickel also gives some good moves.
So you indirectly, is it like that if I'm doing a commodity, should I stick to commodities, or should I not do index or something like that?
There is
Or
nothing like that. It depends on how much
okay.
time you can keep aside. So the thing is, see, let's say that I'm trading the morning markets. If I'm trading the morning markets aggressively, I am kind of exhausted by 3:30. There is nothing much I can do in the evening markets, because I
Right.
lose my attention, right? So same thing, we have a attention span. So that only we will be able to figure out. Now, if you're like, let's say that I'm trading the
Mhm.
morning markets really light, that is, I'm not doing anything, it is just algos that are trading, then
Mhm.
there is kind of no kind of stress, or there is kind of no drain for me in the morning markets. I may kind of think
Right.
about coming to the evening market just like a fresh day. So same way, like if you are someone who's kind of trading only the evening markets, you can do that. You may kind of consider, you could, if you have right now, like you are into full time, like you're full time analyzing the markets, right?
So yes, correct. I'm full time doing it. So in the morning, I'm watching the Indian markets, and as well as the silver and gold. But preferably, I'm giving the priority to Indian markets like Bank Nifty
Okay.
and some stock markets, some stocks also.
Okay.
So what I am doing is, I'll tell you clearly that from 9 o'clock till 1:32, whatever, whenever I get the proper moves in Bank Nifty, I just go with one lot. I'm just trying out. I'm figuring it out. I'm doing
Okay.
it along with Javed so that he is
Okay.
there
Huh.
and
So
to at
you're
least.
trading together, or you're trading at the same place, or like separate?
No, we're doing it separately,
Okay.
but we are planning to do it together in a week or so.
Okay. Okay. Fine.
Yeah.
Okay.
So
Hmm.
So that's what I was thinking about, considering, since price action is something which I am pretty much comfortable in, and keeping my setup very simple,
Hmm.
whichever markets I'm going into. So I think Bank Nifty is also something which I can
Yeah,
definitely hit on.
you can definitely. And in fact, like last 1-2 weeks has been very favorable for directional trading, right?
Yes, yes, yes.
So that is also there. So just keep this point in your mind. So never ever stick with a single setup. Okay.
Okay.
Why? Because once we get too attached to a system or too attached to a setup,
Mm-hmm.
even if the markets are kind of completely different, we probably would have no other choice than sticking with that particular setup if we know nothing else. But if you have 2 to 3 systems that is kind of more or less suitable for, uh, so price action is suitable for all segments and all types of markets also. But if you have two
Mm-hmm.
to three setups that is suitable for different market conditions that you're running
Okay.
together, so that makes more sense. So for example, like non-directional, let's say, like I'll just tell you like my personal thing. I start out the day with straddles because that's the
Right.
easiest thing to be done. Like not much of a headache, not much of a thinking activity is also needed. You just deploy the setup. Now
Correct.
in
Correct.
between, if some sort of a directional trading opportunity that you're spotting, you can think about considering going for a trade over there.
Right.
Now you know that okay, straddle is a non-directional setup, so that'll make you lose when market gives a violent move, right?
Correct.
So if you're going for a directional trade,
Mm-hmm.
so you're kind of thinking about capturing. So you trade in the money options, right? When
In
it
the
kind of
money.
comes to
Yes.
breakouts and all, you go for in the money because that has a higher delta. So
Right.
same way, when it kind of comes to a directional trade, if you're checking out for an ITM option with a higher delta, that actually gives you much more of an advantage of the directional move. And if your straddle had some sort of a stop loss that got you out when the move started, you are kind of still on the winning side because you probably would have captured some sort of a directional move with your directional buy. Plus, the straddle, like the running leg of straddle, would also give you profits. So only the losing leg is going to cut away some loss.
Okay.
So that like that way, like you are kind of actually kind of evolving to the different market dynamics, right? So you had two
Right.
systems. One you starting in non-directional, then you're kind of switching over to a directional. So same way for
Okay.
crude, like as far as crude is concerned, crude or silver is concerned, non-directional is not at all possible. Why? Because like
Yeah. Yeah.
the
Definitely.
options are kind of not at all liquid at this point of time. So there is no
True.
point
True.
in you doing any non-directional. But then,
Mm-hmm.
like let's say that you can actually have two or three you can create two positions at the same time. So let's say that your outlook
Okay.
for short term. Okay, I'll just give you an
Mm-hmm.
example, Prathamesh. So right now you probably must be doing just a directional trading in silver, crude, and all. That is either
Correct.
you go for long or you go for short. Okay, but there is something
Correct.
else that I'm also personally kind of actually trying it out, just getting started. Let's say that
Mm-hmm.
in the 5 minute time frame, your view on crude is bullish. Okay, you may think about trading on the futures contract on the long side. That is what you see
Okay.
in the 15 minute, 5 minute. That is what you see. It looks bullish. You can think about going for a long on the futures. But let's say that on the 1 day time frame, you're seeing that okay, crude is kind of more or less facing a rejection from a resistance level. Now, if you
Mm-hmm.
want, you can actually go for a spread on the short side, where you kind of actually buy a put and you sell a more out of the money put option. So in that particular way, you're kind of actually having two positions, one on the long side, one on the short side. right?
So what the long position will be a
That would
future
be so
position.
that would be a positional trade. So that you
Correct.
probably would be kind of carrying forward for the month. The other trade you probably would be carrying forward for the day. So you can actually, once again, like, there is scope for diversification over there also. So if you
Correct.
see that, okay, so in that particular thing, only problem is, so there's this kind of saying that we should always trade with a long-term trend. But then for that particular day, you feel that crude is going to be bullish. You see bullish opportunities on crude. But then when you
Mm-hmm.
see the price action in the larger time frame, you see
Mm-hmm.
that crude looks bearish. You could think about creating a bearish spread for the overnight or the monthly expiry, and you may kind of think about trading the bullish side for the intraday. So you could do
Okay.
things like that also. So when we kind of
Okay.
actually have, or when we kind of actually have the confidence about diversifying our risk
Mm-hmm.
among different positions, so that is
Okay.
when we could actually kind of have a balance. As in, even if one is going wrong, the other would actually compensate.
Right.
So like the advantage that is actually the advantage of having a bigger capital also. So many people say that you need a big capital to get started with trading. Now, some people kind
Mm-hmm.
of say that no, you can get started with trading with a very small capital also. Yeah, the answer is yes, you can get started with a very small capital. But the thing is, if you have a bigger capital, so it doesn't mean with a bigger capital all your money you're going to take in a single segment or in a single asset.
Right.
Rather, if you're kind of actually spreading your capital among two or three segments,
Mm-hmm.
where you spot different kind of opportunities where none of the strategies are related with each other, you can easily diversify your risk. So one should learn how to diversify that risk. So even if one or two things go wrong, that's fine, because if one wins, that compensate for everything else.
Right.
So you're looking out for 1:3, right? So that means like if you have like one winning trade, that would compensate for three losers.
Yeah.
Now if you want to
One
stick
is
with
to
one,
two and one is to three. That's it.
yeah.
And
So silver and
this.
commodities, you can look out for larger risk reward ratio.
Yeah. Right.
So Bank Nifty, like last one weekend only, you would have got 1:2, 1:3 and all. But then like
Yeah.
before that, like last 2-3 months,
2, 3. It was
directional trading
very
was very
difficult.
tough.
Very difficult. Yeah. I've been tracking Bank Nifty also. It's
Okay.
not just that when I'm doing silver, I'm not tracking it. I'm doing Bank Nifty. I am also tracking straddles since the
Okay.
time I have learned straddles from
Okay.
you.
Straddles, like after like almost 2 months, 2.5, after 2.5 months, last week was the only losing week
Okay.
I had. So in fact, like that is because like there were like some V-shaped moves, all these things happening.
Right. Right.
But it's fine, man. Like you think like I personally feel you're kind of actually on the right track. As in, you kind of know what works, what doesn't work. So
Mm.
you exactly know what works well for you. So
Right.
if you are very comfortable in bringing like more capital, do that. Go ahead. Nothing wrong in that. But then if you feel that okay, your equity is not moving anywhere, so even if you bring more capital, equity is not moving anywhere. So with bigger capital, your emotions are also going to increase. That is also there.
That is also true. Correct.
That is also going to be there. So your emotion, especially when you are trading full time,
Mm.
especially when you're kind of trading full time, when you're increasing your capital, obviously emotions are also going to flow in, right?
Right.
So
Right.
if you feel okay, if you want some more time to see your equity kind of actually growing steadily, just wait. Then think about bringing in the capital. Meanwhile, you could consider doing swing positions,
Mm.
like those that free capital you may consider deploying in some swing positions. Those things also you should try out. So as far as the trader is concerned, like us, diversification is ultimately the key.
Right. So when I spoke to Javed, like he is only tracking only one type of market, that is Bank Nifty.
Yeah.
So I asked him like, why are you not doing other? Like he's also tracking on non-directional trades,
Mhm.
but he's focused on that market right now.
Yeah.
Maybe he's working as well. That it might also be the case that he's busy with other stuff.
Yeah.
But from my case, the scenario is totally different. Like
You have
I
time.
have I have time in hand. I wanted to utilize this particular off season of mine so that
You can definitely. So like you're a
yeah
cricketer, right?
yeah I'm cricket.
So your kind of thing, your good thing would be that your discipline and your emotions part would be more or less stable, right?
It is stable. Yeah.
Yeah. So if that is the case, then like you could very, that's what I said, man. Like you can actually very smoothly trade multiple segments. because like as far as Javed is concerned, like let me just tell you, he is more or less into scalping, right?
Correct.
So as far as a scalper is concerned, he or she would kind of actually look out for quick entries, quick exits.
Right.
Now, scalping and non-directional are kind of two extreme ends, right?
I agree.
So the
Yeah.
non-directional, like you get into a trade and you really don't look into the screen. That's it. You have your rules, you have your stop loss, everything on the system set. Done. You're done. Then if you want to do some adjustments, yeah, you can do. If you have that capability, you can do adjustments. So your particular thing you could try out. You could try out this non-direction. Then one more thing I'll just tell you. So you know the non-direction systems that we follow, right? So
Yeah.
along with that, you may think about making the setup delta neutral with every significant move. That also you could
Okay.
try. Delta neutral means, or else I'll just kind of tell you something else. So rather than starting over with a straddle, you kind of actually think about doing a strangle like 100 points away. So
Okay.
this actually has higher returns, but then the problem is, honestly, like everybody won't be able to do this. Okay,
Okay.
so let's say that Bank Nifty is at 35,000. You create a strangle selling 35,100 call and 34,900 put.
900 support. Right.
Yeah. So now if market, let's say market is sliding down by 100 points. The market
Correct.
slides down by 100 points. That means your call would be profitable, your put would be in loss.
Correct.
Now what you should be doing is you should be bringing down the call option by 100 points.
Okay.
Now again, if the market slides another 100 points on the downside, you can actually convert that particular strangle into a straddle. Again, you can bring it down by 100 points.
Break it down means
You can exit the all call option.
exit.
Yeah,
Okay.
you can exit the all call option. You can bring it down by 100 points. So
Oh, got
then,
it.
like
Got
you
it.
started with a strangle, you converted it into a straddle.
Straddle. Okay.
Again, if the market falls down by 100 points, you exit that particular straddle.
Okay. Okay.
Then you can create a fresh straddle wherever the Bank Nifty is.
Okay. Okay.
Got it. So that way you can actually keep on. So why? Because right now we have actually kind of accounted for a fall of 400 points. So
Okay.
majority of the times Bank Nifty doesn't kind of fluctuate more than 400 points. Now, if Bank Nifty has dropped down by 400 points, and let's say that it is giving a V-shaped move, it is picking up. If some sort of a V-shaped move is happening, that is usually when the decay majorly comes in.
Right.
Right. So the premiums would actually burst.
Yeah.
So you're
Correct.
creating a fresh straddle once the market has dropped. So things like that you can actually look. So with the straddle thing itself, like let's say that you want to get started with a straddle, you consider like every 100-point move that is happening, or forget 100 straddle. You can think about every 200-point move. So
Okay.
every 200-point move that is happening in Bank Nifty, you think about exiting the old straddle, creating a fresh straddle. That can
Okay.
also be done if you have time. If you have time and if you have discipline, you can do that. Now, only when Bank Nifty gives a very violent move, that is going to be the time then your stop loss is going to get hit. But if it is a gradual move, gradual movement, every 200-point move, you can easily like switch your this thing stop loss. You can easily switch the straddle. One straddle you do, then you do another straddle. So you can keep on doing that.
And what is I can definitely try that because
You
as
can
I told
watch that.
you,
If you have time, you can actually try that. But the
yeah,
problem is like honestly speaking, if you don't do anything, also still you can make money doing straddles. Just keep stop loss, just leave it like that. Still you can make money. Nothing else you have to do. Don't have to touch the screen also. But then if you have time, now whatever efforts you're putting over here is going to give you maybe another additional 2%, 2 to 3% maximum. Nothing more than that. But if somebody is
okay,
getting a 4 or 5% without doing anything, and if he's doing a lot of extra work and he's getting another 2 or 3%, obviously doing nothing and getting 5% is better than doing a lot of things and getting 8%. Right. So
yeah.
that's the difference. So if you have time, you can think about doing it.
Yes, I'm. That is why I was tracking straddles since a month now, and I have all the straddles written on my book. Like what
Okay.
is the on daily basis. Like I've maintained a different book for securities, for
Okay.
forex, and for silver as well.
Okay.
And
Okay.
I
So
have all the trades written
yeah,
there.
you're in touch with Christopher also. So
Yeah,
he,
yeah.
I guess like he was kind of so. We kind of got started with forex, and in fact, like we got started with an Arab. So his name is Rami Chadid.
Okay.
So we kind of were looking out for many people who could trade our capital. However, uh, we were not able to come up with anyone who was actually kind of exactly kind of matching our requirements. In fact, people would take time.
Mm-hmm.
So in fact, people would kind of actually take time to get comfortable with what exactly we were looking out for. So you are kind of actually one person whose name you mentioned. Like,
Okay.
so in fact, like there is this guy called Mukul Sharma. Have you heard about him?
Yes, I have read
So
his.
yeah, he also does good. He trades on indicators, but then he follows a system.
Okay.
That is something good. So how do you compare like forex markets and Indian markets price action?
Amazingly different. It is very smooth. Very smooth.
It's very smooth.
Yeah.
So
I
one
love. Actually, I started doing it because I was doing in silver. So when I got
okay.
to know that it is related, I was very crude before.
Mm-mm-mm.
When I got to know, when I learned everything, then I understood that okay, there is a direct connection between XAG USD and silver, MCX silver. Then I started comparing, and I used to trade only in forex, and then I used to take trade in silver, and
Okay.
that used to work for me. So
So one good thing about forex is that like once a direction starts, it tends to be in the same direction for a very long duration of time. So if
right.
you are in the right direction of the trend, you could actually ride it for a longer duration. That's the good thing about forex. But
True.
for you, you can actually kind of consider that also, like along with
Mhm.
silver. And now the thing about forex is like you can actually have like multiple positions that is running. Do you
Right.
have anyone who is an NRI? Like, do you have any close friends who's an NRI?
There are many friends, but
Uh,
NRI exactly in which country are you asking?
any country?
Yeah, yeah, I have many friends.
Then
Like,
then it's perfectly fine, man. You start an account in their name.
yeah, I can do that.
Start like that would be the safest thing. Like that would be the safest thing because if something wrong happens and it becomes a big headache.
I know. But you guys are starting, right, in
We started.
Dubai?
We
As
started.
you started,
We have
okay.
an $85K account in
Oh,
Dubai.
amazing.
So we
Great.
already started.
Agil, I guess he was there with
No,
you, na?
Akhil is not there. Akhil, the thing is, like Akhil is not consistent. In fact,
Okay.
so he makes profit, but then he makes losses also. So like that stability is not present.
Okay, okay.
So as far as that is not there, then so this particular person called Rami, he is 45 years old. He's trading from the last 10 years.
Oh,
Purely currency based. He's trading only forex from last 10 years,
okay.
and he's actually like settled in Dubai.
Mm-hmm.
So we kind of connected with him through like one of our community members itself. His name is Nandu. He's also a full-time forex trader.
Okay.
He is also handling around some $60,000, $70,000. Nandu, but he won't be ready to trade for us because he already has a good capital, right? So
Mm-hmm.
in fact, like it is through him we connected. So we have some plans like copy trading, then forex signals, so everything. So it's kind of going to be like with the same thing we're going to operate multiple activities. So
Okay.
that is what our plans are. And in fact, like Christopher is an NRI.
Right.
He's already having an NRI status, so he's the one who's going to operate it. So only I will just be giving the infrastructure, all these things. So he will be
Mm-hmm.
operating it. So he handles that part. So
Okay.
then one more thing is that like forex markets, like I personally won't be able to get into that because like first thing is like the constraint of time, and the second thing
Mm-hmm.
is you'll lose touch in Indian markets.
Uh, that
So
is also there.
yeah, so silver and this particular forex would go hand in hand. So crude and that thing won't do. Like crude
But
and
US oil and crude might go. Will it go together?
so I personally don't think so. Like in fact, like I'm comfortable in crude. So I tried my hands on nickel, silver, gold, all these things. But
Mm-hmm.
then like honestly, it's very difficult to track.
Okay.
So I really don't think I'll be kind of getting into another segment right now. But yeah,
Okay.
price action, all these things we can analyze. However,
Mm-hmm.
like taking care of the possessions is a different thing, right?
Yeah, yeah, yeah. You
So
have
that
to
is the
track.
thing. Like Christopher is actually purely focusing only on forex, nothing else he's doing.
Okay.
So that's always the best thing also. Like just like that,
Uh, yeah, that's
forex
true.
only bank nifty. Like nothing else you had to be worried about also, right?
That is what I was gonna come to you. Like I was gonna ask this question to you that now I'm tracking three things together.
Mm.
So I started with price action, understanding it, and developing a base for trading. But once I did it, then I'm slowly and steadily got to know that silver is related to forex.
Mm.
That is the reason why I went to like let me understand forex properly before I
Okay.
get into it. So I was just trading with a demo account,
Okay.
and I'm maintains with. So now I have three different options along with me, and then I have somewhere or other I have to settle down. It's not
Mm.
that I can do all the three together.
Mm. Mm.
Even though me, if I have all the time in the world, but still I can't do that. It's not
Mm.
possible. Then how should I decide myself that where should I keep my
See,
feet on?
just figure out for yourself where you're getting the maximum hit rate.
Okay.
Okay. So where you're kind of actually getting the maximum hit rate, where you're getting the maximum this thing like risk reward ratios. So of course the answer for these two questions are going to be forex, I'm sure, right?
Yeah.
So it's definitely forex that is going to give you the maximum hit rate and the maximum risk reward ratios also. So that is one part that you could definitely look into. Now, the other thing, like as I mentioned, you this non-directional setups and all, it won't take you much time to do, right? Since you have
Right.
time in the
Right.
morning, it's hardly going to take you maybe some 20 to 30 minutes per day to deploy your setups. Just that's it. So that definitely you should be doing because it really doesn't take much of your time.
True. Yeah.
That you can definitely think about doing. Then forex
Yeah.
you can do. Forex and your silver trading would go hand in hand.
Right.
Right, and equity swing trading also you could consider doing. Why? Because like you really don't have to spend a lot of time tracking your positions. Once you're taken the position, that's it. Right.
Correct. Correct.
So equity swing also you can do. So in fact, like there is this person called Animation.
Mm-hmm.
So he's also like his niche is basically crude, equity swing, and he's kind of also getting started with forex. Forex he's just trading on a demo account if I'm not wrong, but crude and equity swing he majorly does. So he's
Okay.
also doing trading full time these days. So his particular thing is such that he has around maybe 20 to 30 swing positions that he takes at the same time because he really
Oh.
has the time to track it, and he need not keep tracking each and every position throughout, right?
Mm.
So just figure out for
Right.
yourself. Now each person's capacity is completely different. So you yourself would be better knowing yourself much more than somebody else could say. But have your base in a particular segment. Then think about getting into others. That is
Right.
like for myself, like if you kind of ask me like what I got comfortable